Thank you for joining us for another episode of the Finance Magnets Blockchain Podcast. Today's guest is my dear friend joining us from Manhattan in New York City. Steven, how are you doing, my friend?
I'm well, thank you, Avi. Thank you for having me today.
If you're following Bitcoin news, you must know that right now there's something called a hard fork coming. And you've seen it before with Bitcoin Cash, Bitcoin Gold, and now there's something called SegWit2x something, So what is that, So I wanted to bring an expert on trading to explain from an investor, from a trader's point of view, what's a fork and how to deal with it. And luckily, Steven took up the challenge. So, Steven, let's get right to it. How would you explain to a non-technical, investor what's a hard fork?
Well, there's many ways that people go into explaining this, but the overall essence that you take away is that this is like a clone copy of the entire database, the entire repository of code. It's like literally a cloned version of, in this case, Bitcoin. And as you mentioned, it's happened before with Bitcoin Cash and with Bitcoin Gold. In those cases, those resulting clones didn't really get a lot of Bitcoin's existing valuation and existing hashing power from the miners. But this time, they're expecting that the majority of the hashing power that's in the Bitcoin network today will potentially switch over to this new offspring, if you will. So that's why this hard fork is different than the other two. And the SegWit soft fork that happened, that was kind of a stepping stone. And now with SegWit 2, the big concern is that there's no default replay protection. So what that means is that when this resulting chain is created and people are potentially airdropped SegWit 2 tokens, and they try to transact either SegWit 2 tokens or they try to transact their original Bitcoin tokens, to get replayed on the other chain. So it's not exactly double spending, but if you intend to do one transaction, you might end up doing two transactions inadvertently.
So there's a risk there that we didn't see before with Bitcoin Cash and Bitcoin Gold.
Correct. And now I think that the pressure is on the exchanges and the wallet companies because they have to build out the right to their technology to make sure they're pointing at the right channels where the SegWit 2 coin will exist, but also ensure that they add the right code to prevent this replay from happening. They have to put in their own replay protection. So they call it opt-in replay protection. So it's not native by default. You have to go through steps to add it. And every exchange or wallet provider that allows you to transact crypto may take a different approach to this. So users want to be sure whatever fixes are in place are not going to be vulnerable to these replay attacks.
Yeah, so definitely, if you're listening to this and you're trying to get a bearing on what's going on, you need to check your service provider, your exchange, your wallet, because they're all issuing statements and plans about how to deal with the situation, and they're varied. So different exchanges take different approaches. So you got to know. How to be prepared with your service providers. Also,
exactly.
another thing that we saw this time is that some companies, I think Coinbase, but don't catch me on it, said that that this time after the latest fork, they will refer to the blockchain with the most hashing power operating on it as Bitcoin, meaning after the hash, after the fork, you'd have let's say Bitcoin 1x and Bitcoin 2x, but it's very possible that the Bitcoin we're now calling Bitcoin is going to be the number 2 and not the number 1. So it's very, very strange.
Right, exactly. And actually, they had before that announcement, they said that they would call the Bitcoin we know today, I believe, 1x, and the new version 2x. But obviously, they had a lot of response from their clients, and they came out and they provided the update that you mentioned, and they said wherever the majority of the hashing power is, that's where we're going to call Bitcoin. But how long will they wait? That's the key question, because nobody knows how long it will take for all the hashing power to move over. It could go in bits and pieces, and the valuation as well. The hashing power might not be correlated, in real time to the valuation. So the hashing power could move over, but then the valuation might try to catch up afterwards. So there could be a lot of volatility. I think a lot of traders are preparing by either buying Bitcoin before the hard fork in order to receive potentially, SegWit airdrop tokens. And the safer thing to do, I believe, in terms of attempting to transact post-fork, is to just really wait, perhaps days and weeks for the dust to settle, to see if the wallet providers and exchanges you're using have, re-enabled trading. And if they have re-enabled trading, it may be safer to transact very small amounts and to check other balances you may have to see if your transaction was replayed. So for example, if you have Bitcoin in one account and the new SegWit2 coin in another, you might also have a smaller balance that's tied to a different recovery seed, and then maybe send a small amount from this smaller balance to your other balance and see if that's duplicated on your other SegWit2 coin as well. So if you go through these steps and are able to be sure that your transactions are not being replayed, then that's, I guess, a way that people may test it out post fork, to see if it's safer to trade.
Okay, and how would you explain to people who's asking you, who's pushing for this, right? Why is there a need for a fork? Who's for it? Who's against it? If you can explain that.
Sure, it's pretty complicated. I would say there's a lot of politics involved, but obviously, miners have a vested interest in mining. They want to mine to earn, as well as from processing network transaction fees. But then there's also secondary technology sometimes, side chains, and other businesses that they may be involved with. So I believe that you have two different groups that have different visions for what Bitcoin should be. And in the original Bitcoin that we know today is in the first group, the core group, and they want to keep it as it is and deal with the limitations of the block size at 1 megabyte. And with the SegWit2, they have a different vision of what Bitcoin should be. And it's kind of like they're both sort of, fighting over, who it will be able to claim that the Bitcoin, basically. It's really, how you look at it, because in one way you could say, oh, this is an attack on Bitcoin. It's a 51% attack. I think CoinDesk just ran an article about that yesterday. But the other group, who could be considered, the attackers, they might look at it as they're trying to protect Bitcoin. This is what they believe should be done to improve it. So it's all how you look at it. But there are certainly, politics involved, because, when you have these two different groups, their interests are, and since their interests are sort of conflicting, this hard fork event is kind of a natural competition that exists with these public decentralized networks. So it's going to be a good a test case. There's obviously plenty of money at stake, with Bitcoin's market cap recently passing 100 billion, as you know. But I think the crypto industry is going to be looking at this event to see how other decentralized public blockchains might evolve in the future through such situations.
Mhm. Well, I know there's a lot of people that are just new to this to this world of Bitcoin trading because there's an influx of new traders. So I just want to give them a bit of background. Okay, so right now, people that use Bitcoin not for speculating but for actual transactions, like transmitting money from one country to another, remittances, and buying
Right.
coffee, whatever. They're facing an issue with transactions taking a very long time to confirm. It's because of technical issues that when it was designed, there's a cap on the size of a single a single block. So there needs to be a technical upgrade in order to match the current amount of transaction on the network. And this disagreement between the groups is about what upgrade they need to take. So that's the background. So you'll know. And if you don't know what's hashing power, that's just a fancy word for computer power that's running the calculations, which we call mining, which is basically solving some complex math problems. Okay, which is
Right.
the
No, you're
process.
absolutely right. I'm sorry.
Yeah, no, I'm just bringing up everyone up to speed. If they're just hitting the ground right now.
Right. Yeah, mining's incredibly impressive. When you look at the Bitcoin network, there's some 12,000 or so nodes, and they literally represent one of the strongest supercomputers in the world. When you look at their combined hashing power from the entire network of miners that control that are mining the Bitcoin network, it literally reached, I believe, at the end of last month, 1.3 quadrillion hashes per second. I mean, it's incredible. The amount of computational power that the Bitcoin network has, which helps keep it secure, is stronger than any supercomputer in the world in terms of its hashing power. So I agree, that's an important thing for even new retail traders to know. Keep the Bitcoin network secure.
Yeah, if you've been reading all these opinion pieces on the FT and all places like that now speaking about how Bitcoin is wasting electricity, that's the reason. That's because of the hashing power increasing dramatically. So I don't know if you've seen it, Stephen, but I've been bombarded with articles about how Bitcoin is ruining the environment, which is pretty funny because nobody has ever made a comparison like what's the energy costs of PayPal and Visa and MasterCard and all of the ATMs combined that we're using, which the system is meant to replace. So
exactly, yes, I think now there's a greater importance on ranking companies on their ESG, their environmental, social, and governance factors. And especially with millennials, they want to support companies that are green and eco-friendly. So I think that Bitcoin might not rank highly in terms of the energy aspect, but perhaps in other aspects, it could rank on that ESG factor, the environmental, social, and governance.
yeah, but I don't think you should be too worried, considering that most of them are adjacent to hydroelectric dams and geothermal vents, because those are the places that give you the cheapest electricity, because nobody else wants to base a factory there, but a giant warehouse full of mining hardware has no problem sitting in some subterranean basement, 100 meters underground in Iceland or in rural China. So
exactly, these are, I think, short-term challenges that eventually will be resolved with some technology.
Yeah. Also, eventually, people are thinking about moving to a different different model, like a proof of stake and stuff like that. So, but that's too technical for now. Just so if somebody's worried about the environmental impact, you should know that people are working on possible solutions. Okay, so let's get back to to investor traders. So how do I protect my money, not just from the fork, but also generally you got to have a safety first mindset these days, because we're seeing attacks, cyber attacks, and even just people losing their passwords to a wallet or throwing out their computer. That happened to me as well, but not that large a sum of money. So so how do you protect your wealth in this industry?
It's very difficult. I think it's an ongoing challenge for investors to safeguard their digital assets, because people aren't used to having a recovery key or a password that is unrecoverable. So if you lose your recovery key and you don't have any other access to your digital asset, it's unrecoverable. Your money's gone. So basically, the need to safeguard that key and keep it a secret, because anybody that knows your private key can access your digital asset. But before we go into that, I should just say that there's two scenarios. One is you have your digital asset on an exchange where they are safeguarding your private key. In essence, they're controlling your money. Just like when you open up a Forex account with a Forex broker, you're depositing money with the broker, they're holding that on your behalf in a margin account. It's similar with exchanges that hold your digital asset. Might not even give you the option to export your private key. So in essence, you're trusting them with their money, they're safeguarding your money, and the benefit there is you don't have to worry about safeguarding your private key. The potential negative side to that is that you're relying and you're depending on the exchange to safeguard your money. So I think investors may want to consider both options. You may have some of your funds with an exchange where they're taking care of that for you, like Coinbase. And then, you may also use a wallet provider that is non-custodial, which that means is they're not really holding your Bitcoin. They're just pointing to your Bitcoin on the blockchain or, whatever digital asset you're using. It's on you. It's your responsibility to know your backup recovery phrase. It could be a 12 to 24 string of words. And that's tied to your master private key. So you could use that recovery phrase with any compatible wallet provider to access your funds. So that's when you control the asset yourself. So these are the two options that, there's a third option as well, which is to bid ETF or security or trust or some exchange traded product or a CFD. At forexbrokers.com, over half of the brokers we've reviewed offer Bitcoin as a CFD in one way or another. So that's also another option. I think that caters more to the speculators, because there could be big events like the SegWit2x Hardfork where they're open positions, or maybe the brokerage is not participating in the fork. So I think it really depends. It depends on the strategy of the investor and what their goals are. If they're a speculator, if they're a long-term, hodler, as they say, holding on for dear life. But I think it's important to know the differences between these three type of ways to trade crypto.
Yeah, and mentioning speculators, what do you think the hard fork impact on the price is going to be?
Well, it's hard to say, because you might not be able to trade SegWit anywhere for a while until it's safe to trade, because any exchange that any exchange that's offering it should be taking prudent steps to ensure there's no replay protection risks if they allow people to transact it. But it also depends on again the politics behind different companies, because they may perhaps benefit in some way if transactions are replayed, because it's going to support the other emerging chains. So it's difficult to say, but I think the safest thing is to wait until the dust settles. Because again, if you try to transact post fork, money could be lost if that transaction is replayed on the other chain and it's sent to an address that's not SegWit2 compatible.
Mm-hmm.
So, and that's just one of the scenarios. I think to answer your question with regards to volatility, I believe that there should be massive volatility. I mean, Bitcoin could trade between 2 and 10,000 over the next 15 days. The hard fork's expected to happen next week on the 16th. So some don't trade at least 24 hours before the hard fork. So if you're trying to get in last minute, that's going to be risky, because there could be a lot of network congestion, and it could take a really long time for the exchanges to process your transaction. And then once the hard fork happens again, some exchanges may wait weeks, who knows, months. I mean, we saw last time with Bitcoin Cash, it took some wallet providers, many weeks and months available. I think this time it'll be a little faster, but it depends on the exchange and the wallet providers. Waiting for the dust to settle, I think, is key to avoid losing money on a potential replay attack if you try to spend post fork on either chain.
Yeah. No, if you're holding a CFD during this time, you're I would say very brave, in order to avoid some derogatory terms.
Also, what might happen is if we could if we look at some of the synthetic futures markets that exist in Bitcoin, like the chain split tokens, and there's a SegWit2 coin already trading as kind of like it's not the real SegWit2 coin, but it's just like a synthetic. Exactly.
Futures. Mm-hmm.
Some people say that might not be an accurate gauge right now. It's showing a very small valuation compared to the overall Bitcoin chain. But the point is that something like that could happen, where initially the SegWit2 coin has some valuation, $1,000 per coin, 500, 2,000. And then we could start to see if that goes up and the Bitcoin price comes down. But these two could level out at one point. And perhaps at one point, both could be 3,000 or 4,000 or 5,000. And when you look at them as a whole, they could be at 10. But during this transition, one could reach as low as 2. So it depends how you look at it. Which one are you looking at? Are you combining them both to calculate it? I think there's going to be a lot of confusion for sure, because this is a new event. People aren't used to this type of a hard fork, because again, with the prior hard forks, the resulting chains got very little support in terms of valuation and hashing power. I mean, Bitcoin Cash is still like the 3rd largest crypto by market cap, but it's only 10% roughly of Bitcoin's overall market cap at about 10 billion. So even though 10% is significant, compared to 90%, compared to the size of Bitcoin, it's small. But this time with SegWit2 could end up taking that market cap from Bitcoin. And how that transition happens is really what people are concerned about.
Yeah, and if you're new to this and you want to know what happened before, so before the Bitcoin Cash, the first fork, everybody expected, including me, including everybody that wrote about it, expected the price to, let's say, considerably be depressed, either go down considerably or just be stuck for a while, because people expected, the clash between the two communities, the people that support Bitcoin Cash and people that support Bitcoin, to bring down the price. But very strangely, soon after the fork, the combined price of both currencies was higher than the price before, and people said, okay, because
right.
A lot of people were sitting on the fence waiting for this to pass, and then they came in. So, and I
right.
think that pretty much emboldened Bitcoin Gold, and now the SegWit, because people are thinking, people that are behind these forks, they're thinking, okay, we don't have anything to lose, right? Bitcoin just keeps going up after these hard forks. So, worst case scenario, we have 10% of $120 billion market, that's not bad, right?
Yeah, there's a lot at stake, and I think the miners are some of the biggest speculators in this transaction because they have, you know, so much vested interest in their equipment, in the crypto that they're earning, and they're going to be faced with the difficult decision of, you know, switching over their hashing power to this new chain. And it's really a business decision because mining on the new SegWit chain is not going to be the same in terms of profitability. The variables are a little different. The speed of the blocks is not the same. The value of the mining reward is not going to be the same, you know, unless the prices of both chains are identical. So there's a number of variables that are going to affect their decision process, and some of them might realize they're losing money to switch over to the new chain, but they might be doing that kind of as a short-term sacrifice, jump on the new one and hope for that to grow, for them to recover the lost opportunity of money that they would have lost out on if they stayed on the first chain and they mined. So
Yeah.
you know, they might not all move over at the same time, and that's another thing that people are concerned about.
Yeah, because the miners' decisions are not always, you know, based on short-term gains. Sometimes they make political decisions based on keeping their power or keeping themselves in power. You know, because it's not in their interest to have a decentralized mining environment or obviously not lower fees. So you know they're gonna keep, you know, they're gonna make the decisions that makes most money for them in the long term, like you say.
Right.
But you know, what do you think about going forward? You think, like I said, you know, people are looking at the success of the you know the fork so far, or at least, you know, the lack of failure so far, and it seems like we're headed to a future of more and more of these forks. In your eyes?
Yes, I think like with the Parity vulnerability in a major multi-sig wallet where all this money is now frozen, they're saying that there may be another hard fork there. Like it's like a repeat of what happened with the DAO and Ethereum Classic. So I think public decentralized blockchains will continue to fork, but when you have all the valuation in a major crypto and a fork occurs where all of, you know, a huge majority of the valuation is expected to move over, that I think is a challenging type of a fork than when, just like with the recent Bitcoin Gold, for example, like they have a small group of miners and they want to just do a fork of the network, and you know, it doesn't really cause any ripples in the system. But with such a big event like the SegWit2x next week, again, I think this is going to be like a good test case for the wider community to look at, to see how, you know, the same thing could unfold for other cryptocurrencies in the future.
Yeah, and just again to bring people up to speed, if you're not familiar with what happened with the Parity wallet, is that they had somebody messed with their code supposedly by accident, and about $300 million worth of Ethereum right now are frozen and inaccessible. So people are basically trying to push, you know, the Ethereum creator Vitalik Buterin to do a hard fork again, like happened with after the DAO crisis, which again caused a lot of people to lose a lot of money, and they forked not the blockchain as it is, but they forked it from a previous reference point, meaning they copied it before the mistake. So this is you know, another type of hard fork, not a hard fork meant to improve or upgrade the network with a new, you know, a new offshoot, but rather something meant to reset the, you know, the transaction log to before the you know, something catastrophic happened, which you know, I think it goes against the idea of you know, immutable ledger, which is, you know, what blockchain is supposed to be. But you know, we're still in the very early days of this. If you're thinking like the people that support Ethereum and Bitcoin, these are going to be the new reserve currencies of the world, or even as Ethereum calls it, like the world computer, right? We're perhaps going to see a lot more of these forks until you can say that the system is robust and not going to have any more of a need for forks. But that's only time will tell. Mm-hmm.
Absolutely right. And even Bitcoin, it's been around for nearly 9 years. But I wouldn't say it's in its infancy anymore. It's kind of like going through adolescence, and but there's certainly going to be a lot of headwinds, for public decentralized crypto networks, as well as for the centralized ones that are being proposed by enterprises and banks. A lot of this is still highly experimental in terms of the newest, next generation blockchain technologies they're coming out with. But the underlying infrastructure and using, the most advanced forms of encryption for these networks and the ledgers, as well as to generate the private keys, I think that has already been proven. And unless quantum computers are available, next week or next year, where they'll be able to compute and guess every single possible password instantly, as opposed to having to guess them in a linear sequence like computers do today. Because right now, I think that's another risk that people are concerned about. When they have a private key, that key has been generated with complex math, and in essence, someone could guess your key by accident, but the chances of that are like, so remote. I think it's to the 256 power or to the 512 power. The list of words that they use to create these private keys, like 2,048 words or so, under bit 39, I believe, bit 32 or bit 38. Collision attacks, that is a risk. But again, it's mitigated because it's such a vast, array of possibilities. And we trust this type of encryption in many other places on the internet with regards to authentication. So we're definitely coming into a new world with new cybersecurity standards, new standards for safeguarding yourself on the internet with privacy, with your passwords. So I think these are all coinciding at the same time as crypto currencies are starting to emerge as a new viable asset class.
Yeah, definitely somebody should ask D-Wave that creates quantum computers for Google and the NSA. When are we going to see, when are we going to see them, stealing all our keys and running away with the Bitcoin? But I guess there's a few more years to that, and I'm sure there's brilliant quantum cryptographers working right now on how to solve the problem. I guess we'll see that like 10 forks ahead. We'll have the
exactly.
The quantum resistant
exactly.
coin. Okay, so Stephen, I want to thank you again for taking the time. And where can people follow you and learn more about your ideas?
Thank you so much again, Avi, for having me today. You can follow me on Twitter, Hatzakis, so it's SHATZAKIS, and on forex-brokers.com. We have my contact information, and we have reviews on there about all the brokers we cover.
Great. So I want to thank you all for watching. Please share, like, and subscribe so you can keep following us for more of these interesting interviews. Thank you.
Thank you.